Today's Monday morning mortgage updates, and let's go ahead and get started. So as we know, it's been kind of exciting because rates continue to show signs of getting better. Here's the candlestick charts for the last month and a half. So it's been very nice. I finally have a long period of time where we've seen good news in the mortgage industry when it comes to interest rates, and that's because we're starting to see cracks in the economy. The unemployment numbers ticking up a little bit. We're starting to see the economy slow down, and that's what the Feds wanted. They wanted that to happen. That's why they raised the short-term interest rates. They wanted to slow down everything. Did they do it too much? We will soon see. That's what that hard or soft landing means. If it's a hard landing, that means recession. Soft landing means just a slowdown. So this is where we saw this last since October. We saw the mortgage bonds really lose a lot of ground for a long time. And then we hit a barrier here at the 98.5 Fibonacci level and bounced off. They tried to pierce through it a couple times, but we kept bouncing. Now look at this trend line. So if you look at these parallel lines, somewhat parallel, I should say, you'll notice that we're trading in an upward pattern and an upward trajectory. And today, if you look at this 100-day moving average, we went above it last week. We're teetering in between this range, and we pierced below this Fibonacci level, and then we started today up above through there. So what typically happens is these parallel lines keep going, and we'll go up to this section in here and then bounce back down and hopefully stay in that upper range. So we're going to watch rates carefully. We're up 22 basis points today. We've got a lot going on this week. So we'll watch that, but rates should get better. So if you have any buyers wondering what to do with the rates should get a little bit better going through this. We have good momentum coming over through this Fibonacci level, which is that black line coming through here. We have good motion above it and through it. Now we're going to see how far we can go. And then the 10-year. So the 10-year, when the 10-year drops, mortgage rates drop. So this is hand in hand, where on the Fannie Mae 30-year bond, it's inverse. When that goes down, rates go up. But the 10-year, if it goes down, mortgage rates go down. So you can see since mid of October, it's gone slowly lower, which is good for mortgage rates. And right now we're in this range, and it's bouncing off of this range. So hopefully we'll pierce through this Fibonacci level. This is what I'm really looking at carefully, because if we can go through this, which we did once, if we can go through it and then through the 100-day moving average, then you'll see this continue to climb. So these are the mortgage-backed securities. We'll keep seeing this continue to climb, but I don't think it's going to climb much unless we really dip below this. So we're going to get what's called a short squeeze right here. It's being squeezed in between the trend lines and these Fibonacci levels. So it's going to be interesting to see what happens today. We are in a good position as far as what rates are doing right now for the morning, having this big boost right here. So that was good news coming into this week. So what's happening the rest of the week? It's going to be a pretty active week. Today we've got two auctions. We have a 2-year treasury and a 5-year treasury. 2-year treasury already happened, and we saw the bond market got better. So there was pretty good demand for buying those treasuries. 11 o'clock, which is 9 o'clock our time, is the 5-year. So that should be happening right now. We'll see what happens towards the end of the call here to see how that went down. Tomorrow we have Case-Shiller home price. This is what your customers will see. If you guys follow the Cromford report, you'll notice that this is a little bit lagging, but it's a really good piece to share with your customers when that information comes out tomorrow. Consumer confidence is always interesting to see this time of the year. And then we have treasuries on Tuesday. Wednesday, New Zealand has their Fed meeting to see what they're going to be doing. We have GDP annualized, going to see what that is for the year so far. Producer price index, which is level of inflation, and PCE on Thursday, which is a big level of inflation. We also have jobless claims. So it's going to be Thursday is going to be action packed. We may not see much of a move until Thursday, depending on what happens with the GDP on Wednesday. But Wednesday and Thursday are our big moving days. So we're going to see how rates respond there. So you may have a question of, well, what are rates doing right now? Well, let's have a look at that. So I want to point out, this is really important, guys, because a lot of people come to me and they say, what's your rate, Sean? And I say, well, whatever you want it to be, depending on what the trading range is, really, because that's the answer. You can get any rate you want. You can pay for it, or you can get a higher rate and get actual lender credits. Where do you want to be? It all depends on a lot of different factors. Is it an owner-occupied property? What's your credit score? Is it a single family detached or a condo? How much are you putting down? A lot of factors determine rate. This right here, I'm going to show you what the rates are at different credit scores. And all we're looking at is how the credit score impacts the rate. So at 760 credit score today with no points, the average is 7.662 for a traditional 30-year fixed. VA, 7.519. FHA, 7.519. They're basically the same. I want you to see, this is 760 plus. Once you get into lower credit scores, watch the difference. And I want you to really look at the difference between the Fannie Mae 30-year fix, which is 7.662, and how it goes up compared to VA and FHA based on credit score. So here's 700 credit score. Okay, down 60. The 30-year went up. Nothing changed but credit score, guys. The 30-year fixed, Fannie Mae went up almost 3/4. So it went from 7.662 to 8.25 just because of credit score. Everything else being the same, their income being the same, the property being the same, everything else the same, it went up almost, well, a little bit more than a half. So that is a big impact. That's why I have credit FICOBoost.com that I've created, because if we can get your customers from 700 to 760 in a week or two, they're going to get a much better rate. And that's just another free service that I offer. I'll go over that in a second. So 700 credit scores, we're 8.25, still kind of high if you're a conventional loan with 700. But look at that, VA, you're still 7.5. There hasn't been much of a difference at all in the rate between a 700 credit score and 760. Look at that, 0.519 to 0.546. So a 0.3 basically difference, 0.25, something like that. So not much difference. Now, if you go to 660 credit score, look how much higher you are now in conventional, almost 1% higher in rate compared to somebody with a 760 credit score. So credit score is a massive, massive piece of the overall score or the overall rate picture. But then again, look at VA and FHA, 7.6 compared to 8.5. So you may wonder, well, why is this offer coming in with FHA? It's because that payment's going to be significantly lower if they're doing a 5% down or a 3.5% down or something like that. On an FHA or VA, it's going to be significantly lower than a conventional rate. So if you see an FHA offer on your property, it's probably because that borrower is going to get a tremendous break in payment to take that. And don't be afraid of it, because FHA and VA, as long as they're pre-approved well and done right, there's nothing to be afraid of. Obviously, appraisal issues can come into place with safety issues, health and safety stuff, but as long as the property is good, do not be afraid of an FHA or VA offer. So that's kind of where rates are right now. Now, the big thing that I wanted to talk to you guys about is what's coming up. Now, here's FICO Boost, guys. If you haven't been here, go to my website. It's FICOBoost.com. That's FICO Boost.com. And I'll put that in the chat. It's a free program. Anyone can use it. You can send this out to your customers saying, are you looking to buy a home, but you need your credit boosted? Here's a free program to help you get your credit scores higher so you can purchase a home. It doesn't cost a penny. We do a soft credit pull. We give them exactly what's needed to do to get their credit scores higher, to get a better rate, or to get their credit scores high enough to get into the guidelines required for the type of mortgage that they're looking for. So FICOBoost.com, FICO Boost.com. All right, so community lending program. This is a program, and I'm going to take off my share for a second here. Hold on one second. Stop share. This is a program that we have that is a community program. It's meant for the underserved communities. So you're not going to see Paradise Valley. You're not going to see Scottsdale in this program. But basically what it is severely discounted interest rates for homes, and it's specific homes in specific areas across Arizona that will allow the buyer to get a much better interest rate than a traditional conventional loan, a much better interest rate for those properties. Now, this is unique to us. Not everyone has this. So this is something that we're bringing specially for you, so you can have an idea of what these properties are, and maybe have your customers, your buyers, have a look at these to get a better interest rate. And I'll show you the difference in that and kind of how this program works now as I share my screen again. So bear with me one moment. Where is my little toolbar here? All right, so here is a simple map that what it looks like when I do the search on our internal system. Okay, it's going to show in this area what properties are available, what their prices are, and then when you click on it, it's going to give you all the information on that property. And I want to show you the difference if somebody has a 660 credit score. Now, I showed you this earlier. The rates are pretty high on a conventional loan if they have a 660, but this is a conventional loan. And this is the price difference. This is the rate sheet, guys, on the difference between a community program on the left, which is those specific properties that we've identified that I can help you identify, compared to normal rates. So if you look at a rate with no points, you're basically 7.375, which is below the rates that are being offered for those, if we saw in the previous, it's better than those with really high credit scores. And this is with a 660 credit score. Comparatively to a normal, if you have a 660 credit score at 7.375, you would have to pay $10,000 in points, which is 2.442 points to get that same rate. So that is a massive difference. So it's basically 3/4 in rate that you're going to save your customer on this program. And guess what, guys? You can still ask for seller credits to buy it down even further. And there is a 2-1 buy down program on this as well. So this program, it's property specific and it's searched by zip codes. So if you have any buyers that are looking for a little bit lower rate, or you need to help them qualify by offering them a lower rate, properties in this map area are going to be highly sought after for your buyers. And guess what? This is a very tiny group of people that have this, and that is our company that are bringing this to the market. So I want you guys to really look at this, and I'll show you how it works. So how do you find these properties, you might be asking? That's the number one question I would ask. And the answer is, send me your zip codes that you're looking for properties, and I will show you a list just like this of the properties that are available. Now, not all of them will be available because there are some properties that get pushed into this algorithm that we aren't allowing, and that's manufactured homes. So I apologize for my friends that we are in the Prescott area. Manufactured homes aren't on this. If they show up on the list, we can't do them. Everything else is good to go. But I'll give you this list of properties, and then you can look at what the rates are, see if that property is even something your buyer would be interested in, and then help you guys make an offer on it. So this is the list I'll give you. You send me the zip codes, I'll send you the list. It's as simple as that. So here's a little breakdown of who it's for, how it works. Conventional conforming loans only. It is a 30-year fixed mortgage. You can do 3% down. Credit scores as low as 620. So you can get a phenomenal rate with a 620 credit score. Primary residences only. You can't do investment properties on this, and available with only those specific properties. So I just did a few maps to show you what this looks like. Here's the downtown Phoenix area into see, this is the 10, and where it breaks into the Sky Harbor area. And there's like 6 or 7 properties. It's not a ton of properties, but they are pretty decent properties. So here's another map I have. This is down off Cactus and the I-17 by North Mountain. Then here's another. This is down in the Mesa area, Mesa Tempe area. This is just south of the 202 on the east side of the 101 loop. Quite a few in here. Again, it's by zip code. There may be a ton in this area, but this is just outlining the specific zip code. Nope, I'll get to the Grinch later. But If you have specific zip codes that your borrowers are interested in, I will send you the list of all of these properties to see if they fit and to show you how much they can save, because it's a great program. You're not going to find $1 million homes in here. This is for the lower price ranges only, which right now, with the rates being where they are, will really help people that are in this price bracket, because a little goes a long way in interest rate for them being able to purchase a home that would, maybe they needed 4 bedrooms because they have a lot of kids, compared to like being stuck in a 2-bedroom. So a very good program, guys. It's going to be very helpful to you. And if you have any questions on that, let me know. And the last slide that I had was the Grinch. And here's Mr. Grinch. It is a challenging market out there, guys, but don't be a Grinch. Be positive out there. Make sure your customers know the positive things that are happening. Rates are getting better. We've got programs like these. We have quite a lot of zero down programs to offer you. And so don't shy away from that. Jumbo loans are still great. We have doctor loan. I mean, there's all kinds of things that we have that are helping buyers in this market, where a lot of people are cutting back. We continue to expand, so it's kind of fun. So I'm going to go ahead and share my screen and show above 800, Melanie. There's actually no difference once you get above 760 in that scenario. That's why I set it at 760. So the higher you go in credit score, the better, until you reach a certain threshold. And then everything above 760, sometimes 780, depending on the property, is the same. But good question for you. And then I'm going to put FICO Boost in here. If you haven't been to it, it's a simple website. There's nothing out of the ordinary that they need to put in. So it's nothing that's going to be scary to enter in. It's their phone number, their name, their email address, and what their goal is. That's it. There's no social security numbers. There's no birth dates they put in. And then I give them a call. We go over all of their options, kind of where they're at, what their goals are, and help them from there. But that's FICO Boost. But this community program that we offer, guys, is going to be great. Again, saving 3/4 in rate without having to ask the sellers to get that rate is pretty phenomenal. But any questions on that I can answer? Cindy, yes.
Quick question. What's the closing time on that?
Just a traditional 3 to 4 weeks. 30 days is plenty of time.
Perfect. Thank you.
Absolutely. If you need to go faster, we always can, because it's an in-house product. Because we control everything, we don't broker. If I need to make a deal close in 2 weeks, just let me know. We can make it happen. Now, we can broker if we want, but if we can do it in-house and have better rates, then we'll always do that, because we have 100% control this way. All right, so if you guys haven't played pickleball yet, believe it or not, I'm actually a sponsored pickleball player now. Can you believe that? So as you know, I like to take things to the extreme. I'm pretty passionate about what I do. But so if you guys are looking for really good gear, I really like a company. It's based out of Arizona. They're called Crush Pickleball. So if you ever want to use one of my rackets or paddles and check it out, let me know. I really enjoy their stuff, and they're a great company, locally grown. So if you guys are looking to play pickleball, come out to one of our events. It's a hoot. It really is a blast. And if you haven't done it, just come join us. It's a lot of fun. But any questions? Any other questions, guys? All right. Well, it's Monday. It's a weird month. I want you guys to really focus on boosting your marketing now. When people are taking time off, if you come in and you go gangbusters on your marketing, you're going to pick up market share. So use this time to really get after it. And make a difference for the following year. So if you guys need anything, I'll be here. I'm not going away at all this holiday season. I will be here and helping customers with their loans. So if you need anything, I'm here. If not, you guys have a wonderful week. And I'll stay on here a little bit longer just in case you guys have questions.
Thank you, Sean. I sent you my list of zip codes.
Perfect. Perfect. I love it.
All right. So have fun.
Absolutely. Always. All right, guys, have a phenomenal week. We will be in touch.